Hi all, welcome to Demystifying Accounts. So today we are going to see an important topic in accounting. So what is bad debt, and we'll see what are the journal entries for bad debt and why this bad debts cause. So we'll see each and everything in detail, but before that, if you see what is bad debt, so let's get into the meaning of bad debt. So bad debts are the debts which are uncollectible or irrecoverable debt. So say for example, if a company selling goods on credit basis, because every time we cannot expect the company to get a cash and then sell their goods. So obviously for large scale business it is based on accrual system of accounting, so everything based on credit. So the A selling goods to B on credit basis. So, which is actually the A is expecting amount to be collected from B. Okay. But what happened at some point of time, B incurs some losses. So, hence B could not pay the whole amount. Say, for example, it is the worth of 50,000 rupees. The A company is actually giving a goods to B on credit basis. So, every time, every month on month, B has to repay that amount, or B has to give the amount for the particular invoice for the whole amount of 50,000. But at some point of time, B could not make that amount. So that turned as a bad debt. So bad debt is nothing but the A company A is unable to collect the amount from its customer. So that is turning as a bad debt, and it is a loss for a business. It is an expense for the business. The business of A is getting affected due to bad debt, because that is not going to come into your business. The cash is not going to enter into your business. That is, A is incurring loss, or A is incurring the bad debt as an expense. You can say anything. So it is going to reduce the profit of A. So what is the journal entry that we need to pass here is, we'll see, but before that I think the bad debt concept is clear, so I'll make it clear one more time. So bad debts are the debts which are uncollectible. It can be for any kind of reasons. So maybe for the loss, or the company is going to wind up, or the medical conditions of B is not good enough to pay the amount. So anything you can find the reasons, but at overall picture is the company B could not give the amount, or could not pay the amount to company A. That is termed as bad debt. If you are selling goods on credit, you should ensure like you are receiving cash. If you are not receiving cash at an appropriate time, then that particular cash amount is going to turn as bad debt amount. So that bad debt is a loss for business. It is going to reduce your profit of the business. So what is the journal entry that we are going to pass over here is, we'll see in detail. So the first journal entry, that is for bad debts. The journal entry is bad debts account data to debtors. So here what happened, you are debiting the bad debts, because debit all expenses and losses. So bad debt is an expense. Again, it is going to reduce your profit, which is again to be considered as an expense and loss. So that's why you are debiting the bad debts account data to debtors, because you are going to get your amount from your debtors, right? So that you are crediting your debtors for amount of 10,000. So out of 50,000 goods sold on credit, you are taking that 10,000 rupees is not going to receive on the last month. Why? Because the B company is incurring loss at the period. So that is why 10,000 rupees you are not getting it. Again, if you see what happened, in case if your bad debts got recovered, there is a chance that sometimes the bad debts can also be recovered. So bad debts is not always going to turn as a bad debt unless it is not recovered. It is going to be ensured in the balance sheet as bad debt only. But if at all out of bad debt 10,000 rupees, I could able to at least get 5,000 rupees from my customer, so that is called a bad debts recovery. So bad debts recovery is also equally important. Why it is important? Because you are taking this amount as a bad debt, and then you are going to reduce from your profits, because this is not going to help you in the business. So in the 10,000 is going to your loss, and out of that 10,000, at least 5,000 you can recover from the company B. Why? Because the company promised you, or the company is paying you, not only promise, it has to pay. So the company paying you 5,000 rupees out of 10,000. So that is the only power of the company to pay only 5,000 rupees. So you can recover that 5,000 rupees, that is cash you are receiving. That is why you are debiting your cash account debtor and two bad debts recovered, because you are already debiting that bad debts account, right? So now it is recovered almost. So you are crediting it. So you are crediting the recovery point of bad debts. So initially you are not receiving any cash. That is why the cash is not entering into the business. Only the debtors there, and you are debiting your bank bad debts account. But after that you are receiving at least 5,000 as your recovery amount. So you are receiving cash. Only after receiving cash you are making this entry, because cash account data to bad debts recovered account. So 5,000, the remaining 5,000 is only your bad debts now. So your bad debts has reduced from 10,000 to 5,000, and this portion of 5,000 is going to reduce from your debtors account in balance sheet as well. And it is as well you are going to show in the profit and loss statement, because in profit and loss also it is going to reduce your profits, this 5,000 rupees, as well as you are going to reduce from your debtors to show in your balance sheet account. So this is the holistic concept of bad debt meanings and journal entry. And even if you recover some portion of bad debts, what is the journal entry we have seen here. So every single day we'll cover a small topic, so that it will give you a large holistic picture and you get the connectivity of each and accounting concepts. Yeah, if you really like the channel, kindly do like, share and comment on it. So what kind of topics you would like to hear on the next session. Thanks all for watching.